Welcome, you're watching Beyond Markets. Thank you for joining us. I'm Esther. Awoniyi. Coming up on today's show, we'll be looking at how attractive Africa is to global investors. Remember, you can join the conversation on Twitter. Follow us on @CNBC Africa. You can also follow me on @Esther_Awoniyi. Use the hashtag Beyond Markets. The latest Ernst & Young Attractiveness Survey highlights that for the first time, foreign direct investments into Africa are more evenly spread across the regions, as 4 of the 5 regions on the continent hold an almost equal share of Africa's FDI projects. Henry Egbiki, Regional Managing Partner for EY, joins me for this conversation. Henry, thank you for joining us today.
Thank you, Esther.
The report highlights a number of interesting trends as regard FDI coming into Africa. Well, let's start from, the final analysis, the fact that despite weaker growth, FDI project numbers increased by 6% in 2017. Talk us through what the key drivers were and those regions that saw even more FDI than others.
Thank you, Esther. You're quite right. What we've seen, of course, in the last couple of years, Africa has been hit by very strong economic headwinds, commodity prices, and because of that, the growth rate has been very low. And from the lowest rate so far in the last couple of 20 years, we've seen a turnaround in 2017, where there's prediction that Africa will grow at 3.4% relative to 2.8% in 2017. On the back of that, we've seen the foreign direct investment responding. We've seen, just as you said earlier, 6.2% growth in FDI into Africa. But what is interesting is that, as you also said, we saw a more even spread of FDI across the regions. Of course, traditionally, we've had South Africa leading the way. But right now, we've seen East Africa actually leading as a region. East Africa, commanded about 27% of the foreign direct investment into Africa this year, followed by North Africa, 26%, followed by West Africa, 24%, and then followed by Southern Africa, 23%. What's also interesting, we saw a shifting of the investment across countries. So traditionally, South Africa has been the clear leader, as I said before. Yeah. We've seen Morocco this year, challenging them for that, #1 position. Both of them now take the top spot in terms of the absolute number of projects actually coming into Africa. Both of them commanded about 96 projects each. South Africa actually went down from 139 prior year to 96, while Morocco, came from about, I think, 50-something to 96. So it's quite huge.
Okay. And so what is changing? What is new? I mean, you've just gotten some new markets coming on, and obviously renewed interest, or maybe interest even for the first time for these new entrants. What would you say is changing? Is it reforms? Is it better? What is changing?
Yeah, what we've seen, if you take East Africa, for instance, we've seen high level of growth in East Africa this year. And also we've seen conscious, efforts by the government to actually create attractiveness to foreign direct investment. We've seen in Kenya, for instance, that is leading that growth for the East African region. We've seen conscious efforts to invest in technology. In fact, you find that they dubbed it the Silicon Savannah.
Yes,
so that's attracting a lot of investment into Kenya. If you also look at Morocco, Morocco wants to be the automotive, the hub for automotive, come 2020. And there's a lot of investment coming into that space. In fact, one of the global giants actually has signed to bring in investment worth about $1 billion US into Morocco. So this is what we've seen. We've also seen great interest by the traditional investors of North America, for instance, very bullish, still very bullish. We've seen Europe. But in terms of intra-Africa and investment from Asia Pacific, we've seen a downward turn. In terms of intra-Africa investment, we've seen that it's gone down by 12%. Asia Pacific has gone down by 13%.
That's quite ironic, isn't it? I mean,
yes, it's ironic, but you can explain it. You've seen the economy of China, for instance, it's slowed down in the last couple of years, and there's been capital controls to also control and support the currency. the weak currency. So they're trying to support the currency, and there's control over capital flows.
So we are seeing active positioning on the part of some of these countries to attract foreign direct, FDI, compared to those that investors we usually see as a go-to. Now, one part of the respect, I saw something in this report where it mentions that investors in Africa recognize that low growth rates are not permanent, and so suggesting that the investors that we've seen, the typical investors that we see in Africa or have in Africa, are those that are patient and are willing to go the long haul. Yes, that being the case, but I'm also thinking that as Africa seeks to develop new partnerships, I'm sure you've seen the recent trends where we're having European countries, delegations from European countries, even the UK, coming to, excuse me, establish greater or even fresh economic ties with Africa. So I'm asking myself, is that rule also going to apply to them? Would they be willing, today's investor, willing to be that patient with Africa? Absolutely. That's what we say in the report. I mean, if you look at the low growth that Africa has recorded, even in the last couple of years, and the fact that we recorded 6.2% increase in foreign direct investment, what that tells you is that the long-term outlook for growth for Africa is positive. And in the short term, even though the rates are low, but investors are still looking at the long-term, outlook for Africa. And that is why the investment is coming. And as you know, Africa still has very huge potential for growth. It's just that there are some challenges that need to be dealt with. When those challenges are dealt with, you can see the growth of Africa just, skyrocket. Okay, we'll come to those challenges. Let's also talk about the fact that, this report also talks about the fact that there's renewed interest, or perhaps a shift in interest away from extractive industries or sectors to consumer-focused sectors. Yes. Because I assume the growing, we've talked a lot about the growing or the emerging African middle class. Is that what this is about? What we've seen, before, when we started this survey earlier on, we actually saw most of the investment going to the extractive, industry sectors. But after a couple of years, we saw that shift, and that was being fueled by the increase in the consumer demand, the consumer power of the market. We saw investment going to consumer, and retail products. We saw investment going to TMT, technology, media, and telecoms. We see investment going to business services, financial services. That is turning now in our 2017 survey. We see investment now going into the rich sectors, manufacturing, infrastructure, power and utilities. And we call this the next generation sectors because the huge impact it has in terms of driving sustainable and inclusive growth for Africa. Yes, that being said, fantastic. Agriculture, manufacturing, those are, good go-to sector. Many of them are actually labor intensive. So obviously some of the offshoots or spiral effects could be, employment for the host countries. But my mind goes to some countries, even Nigeria, where, we look across the manufacturing sector, major issues like power, is still an issue. And I know that it's often said that, those challenges also present opportunities. So do investors view those challenges as opportunities? They want to come into a country like Nigeria, they're looking at the consumer sector, they want to come set up factories, but there is no power. What do they do? Absolutely. You're actually right. Manufacturing, for instance, in Nigeria only contributes about 8% to the GDP, which is very low comparatively. If you compare that to China, for instance, at 20%, that is very low. So there's massive opportunity there. Of course, investors look at the challenges, but it depends on how you look at whether you see them as challenges or you see them as opportunities. I think it's a question of the mindset that you bring into investing in Africa. Those challenges actually present opportunities. There's huge investment required in infrastructure. There's huge investment, if you look at infrastructure space, for instance, in Africa, analysts will tell you that in terms of only 34% of Africa has access to roads, for instance. And we know agriculture, for instance, if you look at agriculture, we are told that 50% of crop production in Africa, they are wasted because they don't have access to the market. So the opportunity is quite huge. Only 620 million people in Africa 620 million people in Africa don't have access to electricity. Okay. But these are areas for investment. So investors don't see this, the discerning investors don't see this as challenging. They actually see it as opportunity to invest. And as we always tell investors, those who come in now, we invest at a discount.
Those who will come in later will have to invest at a premium.
At a premium.
So the choice is yours.
I mean, yes, you're right. But also, that being said, also, on the other hand, I mean, coming into a country will also depend on how the business, on the state of the business environment, the business climate, how friendly the business environment is. We know that a country like Nigeria has been trying to improve its ease of doing business to ensure that investors have an easier time. But there are also other issues like, I mean, there's a legal part of it. We have the public-private partnerships. Investors need to know that, look, I mean, key things, can I take my capital out if I want? I mean, will I be able to resolve issues quickly, or would I be able to get justice, you know, we're talking about the rule of law. So these are some of the issues that I feel that, you know, perhaps need to be on ground, because it's one thing to see a region or challenge as an opportunity. There's another thing entirely to be able to convert those challenges into
You're absolutely right. We still have to deal with the challenges in order to become more attractive to him. But I can tell you, our survey actually said that Nigeria, for instance, was one of the 10 economies globally that had that kind of jump, you know, very massive jump in terms of ease of doing business. Nigeria jumped 24 places. You all know that. Yes. So even though this year we stopped, we actually went back by 1 point. But it shows that actually we are making efforts. It's just for us to sustain and accelerate those efforts. We have to deal with other challenges. I don't know if you want me to talk about those challenges right now. We talked about infrastructure already. Security,
massive. I mean, can we expect for
security, policy consistency? Yes. Be consistent around certain things, because what investors want, they want certainty in your policy, you know, so they know where they are. I think that is important.
And they know what to expect.
They know what to expect. So, for instance, the recent experience we have in Nigeria, where you are imposing massive penalties on companies, in the short term can increase your treasury, the number of money, the amount of money in your treasury, but it has long-term knock-on effect, negative knock-on effect on your attractiveness as an investment destination.
Now, for infrastructure projects, massive infrastructure projects, I'm also thinking to myself, for companies, would you say that there are regions where, when it comes to infrastructure, that country, that region is an easy go-to for investors, regardless of, you know, what the returns or whatever it is has been said about that region? Is that a trend that's happening?
I think that is why South Africa has always been the clear leader. Because in terms of infrastructure in Africa, they are way ahead of every other. But again, it's not just about that. You also, you have to marry that with the rate of return. Because when you invest, so they also follow growth. Yeah. So, it's your investment going to, what's the rate of return on your investment? Okay. That's why South Africa now, in spite of the level of infrastructure, it's also becoming, it's not as attractive as it used to be, of course, coupled with all the geopolitical issues around in South Africa.
Henry, we'll take a short break and we'll come back and pick it from where we left off. We must thank you for your time so far.
Thank you very much.
Speaking to Henry Egbiki, Regional Managing Partner at Ernst & Young. Still with me on today's show is Henry Egbiki. He's the Regional Managing Partner for Ernst & Young. Henry, thank you for your time so far.
Thank you, Esther.
Now, of course, we cannot talk about growth, we cannot talk about investment without talking about Africa's political landscape. Way before now, Africa was seen as that continent with rife with conflict, especially conflict. We still have that. We still have major security issues, and I know that when it comes to risk, political risk, that many times, oftentimes, is top on investors' list of concerns. But how did you see that changing now, looking at Africa's political landscape?
I think we've seen that changing. Of course, we've seen seamless transfer, of government from one party to the other in Africa. There's definitely, a lot of improvement in that. But given the fact that if you look at 2019, almost about 13, not less than 13 African countries will be going for presidential elections. So that's also causing a lot of tension, a lot of anxiety. Of course, we know there's always slowdown of economic activities prior to the election and also slightly after the election. So that's causing a lot of anxiety. And investors, as you know, capital is a coward. He waits on the sideline and see what happens. It doesn't like uncertainty. So we are going to see some slowdown in investment into Africa just to ensure that they see the clarity around where the new government will be going in 2019.
Okay, with the way things are going now, Kenya taking the top spot, at least from the eastern region. Are you able to plot to see how if Kenya is going to, a country like Kenya or a region like East Africa can sustain that FDI growth, looking at the amount that is coming and the ability to continue to attract that level or perhaps even more going forward?
I think you just need to focus on economic reform, which I talked about earlier. So consistency in policy, ensuring that you create the conducive atmosphere for private sector to flourish. I think the challenge has always been we don't have conditions that encourage entrepreneurship and the development of SMEs. So governments in Africa needs to ensure that there are policies that encourage and create those conditions for entrepreneurs to strive and for the development of SMEs. I think that's what Kenya is doing. For instance, I talked about the Silicon Savannah. We just need to create some industrial parks and then make sure that we're able to attract investment into those sectors. That's what we also need to do in Nigeria. We know we have a lot of policies, but at least choose one or two sectors and that you actually want dedicated attention and then you're able to attract investment into those sectors. Would
you say that governments, African governments, are engaging more with foreign with foreign investors? Some of them go on a couple of road shows within the country itself. There are a lot of economic summits attracting, across states. I'll use Nigeria as an example. We've had last year, this year also, we've had a number of economic summits across individual states trying to attract FDI. And I always ask that question, do we know what foreign investors want? Are we able to tailor some of those what it is that we have on offer to meet their needs and ensure that when they come, they actually stay?
Road shows are good, but it must not be talk shows. So what's important is what you're actually doing on the ground. So that is very important. Ensuring that, for instance, investors are looking for is a place that is secured. Security, you have to deal with it. Of course, we know in our country there will be issues around security. Of course, that's improved right now, but it hasn't gone away completely. So we need to focus on that to ensure that we deal with issues around security. We give confidence to investors as they come in. I talked about policy, consistency in policy. I talked about ensuring that there's certainty around those policies. Ensure that the legal and regulatory framework is right. So I talked about infrastructure earlier. The gap is huge. Government alone can't deal with it. You need private sector to deal with it. So to support government in dealing with it. So you need that handshake between government and the private sector. And to do that, you need to build that confidence, continuity of policy. One government goes, so the ability to enforce those contracts that have been signed with the previous government. I think that those are areas that we need to focus on as a people.
Let's talk about how global events, geopolitical events are impacting the movement of FDI across the globe, especially those who are wanting to move towards the African continent. What is the impact that we're seeing? We have the trade wars going on now between the U.S. targeting a big country like China. What is that impact?
Yeah, clearly, that's definitely what it will have a knock-on effect on especially the African countries. The trade, the tariff imposition by the government of Donald Trump and the retaliatory measure also by the trade partners, clearly. Of course, we all know the target is China, and China is a big player in Africa. So as that hits China, it's also going to hit Africa. That's what we see. Of course, we see, Donald Trump is having this protectionist kind of policy, America first policy. That clearly is going to have, is going to create a lot of tension in international trade across the globe. And as I said earlier, Africa is going to take a hit. Some of the mature markets will also take a hit. But in terms of significance, it will hit more some of the emerging markets, especially Africa.
But can we expect, we've been able to rely and depend on the mature market, mature investors who have been here, who know Africa and have been with Africa for a long time. In terms of their increasing FDI from their own part, can we expect that to increase going forward? Yeah,
what we've also seen is that in spite of what Donald Trump's government is doing, Africa is not on his radar. We've seen that with the way he talks, even his actions. But we've seen increase in the private sector investment. American companies are investing more in Africa. So what that tells us that they see potential in Africa. So they are not aligned with some of the things the government is talking about. So I think that is positive, and I think that is going to continue. What we need to do is make sure we get right, ensuring that we're creating the right atmosphere to increase, to attract investment. And that's all we just need to focus on, doing our outbid, ensuring that we actually investing in the critical sectors of the economy.
Now, the report also highlights for some of the African governments, rising government debt and weaker currencies. As this might be a short to medium term challenge, but it's a current challenge right now, especially for those want to attract FDI right now, as it were. So I'm just thinking, what is the impact, or how does that affect FDIs?
I think Yeah, you're right. National debt across African countries will be quite worrying. Of course, it's been on the rise in the last couple of years. But I think that is expected. It's aligned with the drop in the revenue. Okay, most of the African countries, they are mono-product economy. They rely on the commodity prices, and the shock hits the revenue. That gap is created. For instance, in Nigeria this year, we had to fund the fiscal deficit, budget deficit of about 1.95 trillion naira. So most of these borrowings were borrowed to fund budget deficit. But the question is, what were they funding? Were they funding consumption? They were funding investment. I think that is the concern. And I think that's going to continue for some time until the revenue stream actually goes up. And the only way to sustain that is to ensure that we're investing in the critical sector of the economy. We're actually diversifying the productive base on the economy, so we are not dependent on one product for the revenue of the economies. I think that's what is going to sustain growth and make sure that we drive inclusive growth and improve the standard of living for our people. Okay,
obviously, we've had several conversations about that. African governments needing to diversify away from the natural dependence on natural resources into other sectors. Do you see a strong push? Just a little digression. Do you see a good amount of commitment on the part of African countries, especially those like Nigeria, for instance? 90% of our FX revenue is coming from oil. Do you see that strong push to diversify?
We hear a lot of talk, but I think we need to do more. Again, it's not a short-term approach. You just need to focus and keep doing it. The result you may not see today, but the result is going to come. And that's why I'm saying let's invest in those real sectors, the one we call in that report, the next generation sectors, manufacturing. Let's push that up because, for example, if you look at intra-Africa trade, as I went down, you can't give what you don't have. So even when you create, we'll be talking about this one, Africa wants to create, one continental free trade area. Right now, that has the potential of boosting trade by almost $35 billion US. But to do that, you need to have something to exchange. So when you step on the manufacturing, then you're able to, that will improve, your ability to participate and get benefit from that one market concept. So we need to ensure that we are investing in those critical sectors. Infrastructure, we need to continue to invest in that. Power and utilities. Those are the drivers. These are the drivers of the economy. This will help us to actually drive that diversification that we're talking about. We hear a lot of talk around it. As I said, I don't think we need to align our actions with what we are saying.
It's all about implementation.
Yes.
Now, so for 2017, 6% growth in the FDI project numbers. Do you have a medium to long term, or it's just you just have to see what the following year brings in terms of the level of interest and FDIs in terms of, I'm just trying to look 5-10 years down the line. What are those countries that are going to stand out in terms of FDI, and maybe based on the reforms that they've done, maybe some surprise new entrants, as it were, from across the continent on that list of like the top 5 FDIs coming into the continent?
It's difficult to predict, actually, but from what we see, if the countries are in the front line right now, they are consistent and they sustain what we are doing, we are sure that they will retain their top spot and even improve on them. But I think what the other countries need to do, what is clear that as you focus on economic reforms, as you focus on diversifying your economy, as you focus on growth in your economy, you will get, investors will be attracted into those economies and begin to invest. I think that's the picture that we see. Okay.
Henry, thank you so much for sharing that with us today. We appreciate your time.
Thank you very much.
I've been speaking to Henry Egbiki, Regional Managing Partner for Ernst & Young. Well, that's all we have on today's show. As always, you can watch all previous episodes of Beyond Markets on our website at cnbcafrica.com. You can also stay engaged with the hashtag that's Beyond Markets, and you can follow my Twitter handle too at Esther Awoniyi. From myself and the rest of the team, to have a wonderful evening.